Hey, what's going on YouTube? Welcome back to another episode of Calvin Lim Investing. As usual, I'm your host Calvin, and today it's just going to be a quick hitter, short episode, and we're going to take a look at a couple of stocks that ARRK has bought. These stocks dipped after earnings last week, and ARRK bought the dip. So Cathie Wood is pretty famous for buying the dip, and we're just going to kind of take a look at a couple of stocks and sort of go through it and see why buying the dip may or may not have been a great idea. So with that being said, obviously the same three things as always. First is there's a free Discord that my friends and I created. Link is in the description. Come join us. Second of all, if you would like to show some support, definitely please subscribe to this channel as well as like this video. And finally, as always, I cannot preach this enough. Always do your own research and due diligence before you buy any stock, crypto, or equity or asset, right? So with that being said, let's get right into it. So I'm here on Lucid Beta. It's a pretty cool site. I have an account with them that tracks sort of some of ARRK's biggest moves. So last week, you can see that ARRK bought $71 million of Twitter. They bought over 1 million shares, almost 1.25 million shares last week. Or this is from Friday. So after earnings, they bought the dip. They bought a huge amount. So we're gonna kind of look at it. Let's look at Twitter real quick on TradingView. So Cathie Wood bought Twitter right around here, this area, on Friday, due to the fact that they dipped after earnings. So as you can recall, Twitter reported inline earnings. They didn't have a huge beat. There was nothing really spectacular about their earnings, so that's kind of the reason why they dipped. Let's just take a quick little look at their earnings as well. So let's see. So no, let's not go here. Let's go to, okay, let's go here. Let's go to Yahoo Finance. So Twitter reported revenue for the first quarter just slightly above 1 billion. They beat the estimate by 0.01 billion. Nothing crazy. The EPS was 0.16. The estimate was 0.2. So they beat in two directions. But what happened was that the forecast was a little bit bleak, and the predictions and the forecast of revenue and growth and the user growth was a little bit weak. So that was what really put a dampening point on Twitter earnings. You can also see this with Pinterest, which took a big hit because of their projected or their forecasted user growth as well. So as you can see, she bought around here. She's probably going to look for a move back to at least 60. So I think Twitter has a good chance of at least retouching the lows from March. I think it definitely has room to climb back up and touch the 60. So Twitter is definitely one that I really like, and I think I will be buying some shares and buying the dip. Next off, the second of ticker we're going to talk about is probably going to be TDOG, or is going to be TDOG. This is the last one I'm going to cover. She bought about 33 million worth of TDOG. This is almost 4 times more than the next ticker, which is going to be PDD. So we're going to look at TDOG, which also reported earnings last week and did not fare well at all. So a lot of tech companies reported earnings last week. They've all kind of struggled. So you can see that TDOG reported around here. They fell under 170, climbed back up a little bit and continued to dip. I do think that right here might be a pretty good point. So you can see that there was long-standing support at about the 166 range. It broke below it, so I'm gonna wait for it to to rediscover some level of support before buying in. But you can see that TDOG since March reaching, it was almost $310. It's down almost 50%. So definitely a good opportunity to buy the dip if you are bullish on TDOG. Let's kind of look through their earnings real quick. Let's see. Okay, so TDOG came out with earnings of 13 cents per share, beating the estimate of a loss of 57 cents per share. So they did really, really well in that department. Let's see. The company also posted revenues of 453 million, compared to 180 a year ago. So they more than doubled their revenue year over year, which is pretty significant. This is part of the COVID impact because Teladoc is a telemedicine company. So let's see what else. Yeah, that's. So just off the bat, this doesn't give me any huge ideas on why Teladoc dropped. Let's see if there's another article. Let's go to the street, see if they have anything for us. Let's see. They cut their price targets, I guess. Oh. No, nothing really significant that would lead me to have any red flags on Teladoc. So I think that Cathie Wood is making a good decision. I think that ARRK is making a good decision in buying the dip with Teladoc. So I will note this one down as well, and also look to buy in. I do want to make sure it finds some level of support because it does look like on the, let's see, let's put on the daily. Let's chart this one out. So on the daily, it's right below some level of support. I can get a rough level of support right around here. This is more or less a level of support, and it broke below it. So I'm gonna figure out this. I'm gonna wait and see where it really goes before I make another move. And once that kind of gets confirmed, I think I will be buying some TDOG as well. So with that being said, thank you guys for joining in on a really quick segment on buying the dip and whether or what ARRK is doing when they're buying Twitter and Teladoc dips. So once again, just to recap, ARRK is buying TDOC and Twitter. Both companies tanked after earnings report last week, and we are just kind of going through and trying to figure out if it's a good buying opportunity, if it's smart to buy the dip, or are there any red flags. And right off the bat, I don't really see any glaring red flags, so I do feel confident in buying dip as well. So thank you guys so much for tuning in today, and before we go, be sure to hit the subscribe button, and I hope to see you guys around.